What's up, everybody? We are live. It is 2:22 p.m. That's good luck. We missed last week, but we're coming at you with another macro overview. Isaac, how you doing today, man?
Yo, doing good. Just hanging, chilling, zoning, just having a good time. How about yourself?
I thought you was gonna say zoning and boning. I was gonna say, whoa.
Zoning, that'd be very inappropriate. I would never say that.
I'm doing pretty good, man. I'm doing pretty good. It was supposed to be raining today, but it looks like the sun is shining. So
Oh
after this call, I'm gonna go on a little hike, and then I got a massage booked for 7:30.
Oh wow, massage. How
Yeah.
much do those cost?
Well, I use ClassPass, so I pay like $89 a month, and I'm getting an hour and a half massage. That Chinese lady gonna walk on my back. Yeah, I
Oh
need.
really?
Oh yeah.
Oh my
If it
goodness.
ain't, if it
Okay,
ain't
cool.
poles, if it ain't poles on the ceiling, I'm not going in.
Yeah, hey, that's the way to do
Yeah. So,
it.
so yeah, man, we're gonna hop into this. This is gonna be a quick one, guys. We're gonna cover some Bitcoin data. We're gonna cover a little something that we don't normally cover. We're gonna cover the ETF data like we always do, and just kind of give you guys our macro overview as per usual. JT is not with us today. He's on the road. He'll be here in a couple hours. So from here on out, he'll be here in the same place. And we got some good things in the works for you guys. All right, so I'm going to show some different charts here. So this is a Bitcoin dollar chart, and it shows the patterns that you kind of see before a bull market. So we have the pre-halving. Again, we have the halving coming up in a little over a month. So we got the pre-halving downside, the pre-halving rally, the retrace, the resistance, and the parabolia. So you can see here, these lines are the halving. So you see that Bitcoin likes to pump before the halving. There's always one last dump before things take off. And this is part of the reason why we feel we're going to have one more dump. Like if you see back in 2020, we saw this line go back down here to the bottom of this ascending wedge. It went to the bottom of it, and then it went up before it broke and retests. And then we saw this bull market. So we're kind of seeing that same setup here. And if we come down to this line, that'll be like a 35 to 40K Bitcoin. Could go below like it did here. Just one last flash crash so that institutions can drop the price and get Bitcoin at a cheaper price before it's off to the races. And if we just go by these same numbers, we should see Bitcoin at over 100K. But like I said, it also depends on the Federal Reserve and if they start to lower rates and, just depending on what they do. So that's the first chart. If we look at here, this is Bitcoin market cap dominance compared to altcoins, because it's crypto cap. So you can see in the 2017 altcoin season, you saw Bitcoin dominance drop. You saw Bitcoin dominance rise and it dropped. By the way, this is from crypto_proof on Twitter. Got to give him his credit. Saw the same thing here. And now we're building up to this channel. And this will mean a lot more because we have an ETF. So the Bitcoin market cap is a lot higher this time around. And we're kind of lining up to see that same altcoin season. Not quite there, but things are lining up. And then we have the MACD at pre-bull market levels. So we saw it at this level here. This was 2017. And then we have 2020. And then we have 2021. And now here we are in 2024. And if I go to this next picture, you can see that every time that happened, like I was saying before, it coincided with that altcoin season that we were talking about a few charts back. So yeah, it seems like things are lining up, guys. But like I said, it all depends on the Fed. And then even cooler news today, you can see that the price volume from the iShares Bitcoin Trust on the daily, 1.1 billion. We're right under the S&P 500. So, by the time we're watching this video at the end of the trading day today, we're shitting on gold. Right? We're shitting on gold pretty hard. We're shitting on certain S&P sectors, but not the whole S&P 500. We could have a day where Bitcoin trading volume from the ETF could exceed the S&P 500, which would be insane and monumental. And then lastly here, you can kind of see that the Bitcoin ETF data is picking up, but a lot of people are wondering like, well, why isn't the price rising? Well, it could be a situation to where you have a lot of trading happening that's not on the actual blockchain. And what that means is that you have Bitcoin in wallets, and this is kind of like over the counter. People will say like, oh, I want to buy 1,000 Bitcoin OCC. It's not actually moving on chain. They're just exchanging the owner of that wallet address. So the Bitcoin didn't actually move, just the ownership of the wallet or however they do it. All right, now let's go through our per use stuff. You can see the disparity between the central bank balance sheet is getting wider from our 200-day, which is good. You have the M2 money supply. Looks like there's a tick up here, but it's kind of still just consolidating. You have gold consolidating near all-time highs. You have, that's crazy, gold's at all-time highs, but Bitcoin ETF trading volume is still just shitting on it. You have the S&P at another all-time high again for the 34th week in a row. Same thing with the Dow, and we have the NASDAQ touching previous all-time high levels. Coinbase, they had their, I think it was their first profitable quarter in a while. They had like 200 and something million dollars in profit. So Coinbase has been pumping. And you guys heard me say this is the only stock I'm buying right now. Bitcoin is just mooning. It's showing his ass right now. We're at a 54K Bitcoin. And it doesn't even seem like we're near previous all-time high levels. And guys, this is the monthly chart. So for the past 1, 2, 3, 4, 5, 6 months, Bitcoin has been going up. That says a lot for a monthly chart. You have Ethereum above $3,000, and this is a monthly chart for ETH as well. So for the past 5 or 6 months, ETH has been mooning. And if we look at the total crypto market cap, we blew through the $1.7 trillion level. If I go back down to the weekly here, normally we come up here, we see a retest, and then it's off to the races. Like the market likes to move between these ceilings and floors. So we'll see if we get a retest here. Like I said, I am expecting one last dipperoonie. I wouldn't be surprised we come back down, retest this level. And depending on what the Fed does, you know, kind of off to the races. We see stablecoin liquidity dropping down into the bull market levels. And when people are selling stablecoins, that means they're buying altcoins. They usually have their stablecoin sitting on the sideline. Same thing here with USDC, though not as much. But the Tether market cap is way larger than the Bitcoin market cap. And you got ETH BTC just kind of hovering around these levels. And then some of the altcoins that we've been talking about still pumping. Pendle went up, went back down to this level. I bought a little bit more here. We talked about Maple. Maple's been pumping a little bit, so that's nice. So yeah, I don't know, man. It looks like still in those beginning stages of the bull market. Isaac, what's your thoughts on everything, man?
I hate to say it. I don't think my thoughts have really changed in the last 2 weeks. I don't see any fundamental changes occurring right now from like where we're on track. I think that the argument that inflation was a result of supply chain disruption, COVID lockdown measures going away, causing a increase in demand, but not a subsequent increase in consumer supply, resulting in high inflation that is now corrected. I think that's kind of been proven basically at this point. And now, you know, we have increased our consumer production, you know, like goods production to meet consumer demand. So inflation is, you know, falling down to like reasonable levels with, you know, a bit still kind of like fundamentally, I guess, stuck, you know, but we're basically at like our normal inflation rates. I could see then the Fed easing up on rates in the next maybe 1 to 2 months here. I think that's what the betting markets say. They say, you know, we should probably see a rate cut. I think next month is the first month that most people are counting on a rate cut of like 25 basis points. So and outside of any major, I don't know, increase in inflation, which I don't see happening, I don't really see why that wouldn't occur unless, you know, and other than like maybe the Fed just doesn't see an impetus to because the market's fine. So why wouldn't they? But even that, like, I don't really see like any major disruption to the market occurring in the next few months. I have heard some talk that there might be like an AI bubble forming right now. Now that I could see, and I would probably bet on that maybe happening, but I'd have to look into that a bit more on like what the you know, hard analysis is on why we are currently in an AI bubble, other than it just feels that way.
Yeah, I definitely think we're in an AI bubble. Just a little something so you guys know. If you look at the top assets by market cap, you got gold at 13 trillion, but you have Nvidia at 1.9 trillion. And Nvidia has been pumping really hard because they sell like the GPUs, like for all the stuff that AI uses. So NVIDIA has flipped Amazon, it flipped Google, it flipped Silver, it flipped Facebook, and it's not too far off from flipping Saudi Aramco. It's only $100 million behind, less than $100 million behind, and it's $1 trillion behind Apple and around $2 trillion behind Microsoft. So as the AI bubble continues to ensue, we could see NVIDIA as the number 2, number 3 top asset in the world in terms of market cap, which is kind of crazy. And then if you go to crypto market cap, or if you go to CoinGecko, you can see that AI coins have just been pumping. You got Palm AI up 18% today, Humans.ai. If you look at the AI coins on CoinGecko as well, you can look at the 7-day and you can see that they're just all just pumping super hard. Render up 22%, Fetch AI up 19, Akash 14, Singularity 38, 79, 38, 62, 25, 16, 53, 69, 72, so 103 Jakal protocol. I don't know what 99% of these are, but yeah, we're definitely in an AI bubble. And I do think that the AI narrative is going to be one of the biggest narratives like going into this next bull market. But in the last video we made, we were talking about, what was that law?
Amara's law.
Yeah, if you look at Amara's law, we covered on our last episode. It talks about how people get excited about something early, but it's usually not as hyped up as it seems. But then people's excitement dies down when the hype is actually there. I think we're in the former, because a lot of these AI cryptos have no use case. They're copying Chat GPT. Like there's a handful of them that's doing stuff, but for the most part, they're just making these names so they can like add to the hype, and people are just buying them.
So yeah, I mean, I agree with this. I'm actually going to write a paper, kind of an update paper on Amara's law in relation to AI, because I totally see that we are kind of heading in that direction right now. This is, some people are saying this is going to be like .com bubble. I don't know about that, but I do think that we are approaching a point where it's going to be very clear that a lot of these stocks and different AI cryptocurrencies and startups and stuff are overvalued, that they're crowding out the market, and that there isn't enough actual earnings in order to, support all these different ventures and companies and stuff. And we're going to see the bubble burst. I could totally see after that occurring that we enter into the next stage of Amara's law, where people are like, oh, AI is stupid. AI is dumb. It has no intrinsic value. I can't believe we thought we bought into it, yada, yada, yada. We're not quite there yet. I think people definitely start overhyping it. We're in the bubble phase, but I don't think that we're going to last in it for much longer, because isn't it NVIDIA is the third stock ever to reach a total market cap of over 2 trillion. Yeah, I mean, like, this is, I think, very indicative. And the different crypto, coins and such, you're showing me AI-based crypto coins. This is very indicative of what a bubble looks like. It just seems very clear. I think that another stat was the PE value right now is insanely high for almost all of these different AI related stocks and stuff. I think the stock market generally has a very high PE ratio, which is the price of the stock versus earnings on the stock, which can usually be an indicator of an overvaluation occurring. So I believe this PE value is higher now than it's been in like a few decades, if I'm looking at it correctly, which, I think this is all indicative of we could see a pretty strong correction here. And I think the impetus behind this correction is going to be a crash or a drop in a lot of these AI, stock prices, AI company stock prices, and in the crypto world, AI crypto tokens and stuff like this.
Yep. Don't mean you can make some money, but you guys definitely want to be careful.
Yeah, I would be careful. I think that I could be wrong. I could see, maybe we're gonna go to 2 trillion for in the video. So I don't know, I could be wrong. Or 4 or 5, we'll just keep going. But yeah, generally this seems to me like it's a overvaluation that is very common. Amara's law, very common in the early days of a technology to overvalue it. And I think that that's what we're seeing right now. We're seeing an overvaluation. Look at our Amara's law video to, look at what I'm talking about here. But the way that innovation works is it works on an exponential growth chart. So in the early days of the technology, you actually don't see a lot of massive groundbreaking changes. It seems groundbreaking to us because it's something novel. ChatGPT is something novel, but it actually is moving in a fairly slow pace of development. It's once you get further down the line that you see this exponential growth curve, because the technology is based off of information. And, if your information compounds, when you're discovering new things, those new things compound on one another. Thus, you go into this exponential curve where the compounding knowledge isn't causing a linear growth, but it's causing a growth that builds on growth, that builds on growth. But we don't think that way. We think linearly. So I think that a lot of people thinking of things linearly are expecting things to be further along than they actually are. But we're still kind of in the early compounding phase. And then once the bubble bursts, that's actually when we'll see a lot of real growth and where there's going to be a lot of really good opportunities for investment.
I agree, man. Have you made any changes to your portfolio? You buying or selling anything different?
I was actually debating whether to sell some Bitcoin. I was like thinking, because I wasn't sure. I'm kind of in your mindset where I think I could see some short-term volatility that brings the price down. That seems kind of stupid though. So I'm probably not going to, especially with like the way the prices are right now. But I was debating it. I was debating selling some and then just going back in maybe like another month or two. I was thinking the impetus could be the Fed not cutting rates, which I could totally see happen. People expecting a rate cut, Fed not cutting rates, plus overvaluation of AI stocks, leading to a correction in the stock market, and that leading to a better entry point than right now. But I'm probably not going to do that because my risk aversion is like, why would you like Bitcoin just reached 54K? Why the hell are you selling? So I'm probably not gonna. But that's an idea at least. I'm staying neutral for the time being. I'm staying with what it was previously.
Okay. Yeah, I'm still just yield farming. I've been slowly buying a little bit more alts, maplefinance, pendlefinance, clearpool. I'm really looking at private credit protocols because, and I made a video on this on my personal channel. I feel like in crypto, you can only get access to, or mainly get access to, over collateralized lending, which is kind of like the pawn shop model. Like I pawn my phone, they tell me how much it's worth, and I can take out a loan. If I don't pay it back, they sell it. That is not how real people borrow money in the real world, and it's damn sure not how institutions borrow either. Like I think about how impractical it would be if you were going to go get a mortgage. Your mortgage is 300K, and you got to put down 400K in order to borrow 300K. One, it's impractical. Two, you have to trust that whoever you're borrowing the money from isn't going to lose your collateral like BlockFi and Celsius did, right? And we saw that in the peak of the bull market, we were at $1.5 billion in private capital lent out. Now we're at around 490 million. The reason why I think these protocols are going to pump is, one, interest rates are high too, so capital is expensive. Two, mainstream banks and financial institutions don't lend to crypto companies because they still see it as risky. So it's a huge blue ocean for someone to come in and lend to crypto companies. So once the bull market ensues, the balance sheets of these crypto companies are going to balloon because they hold Bitcoin, they hold ETH, they hold altcoins. That's going to increase their credit worthiness, right? And they're going to have to go to these protocols to borrow money. Protocols like Maple, protocols like Centrifuge, protocols like Clearpool, protocols like Goldfinch, and that's going to fundamentally increase their value as well because their active loans is going to go through the roof. And not only that, like it's like a chicken and egg solution. Like there's the chicken and the egg there at the same time versus you having to go and get one or the other. And what I mean by that is obviously the company's credit worthiness is going to improve because of their balance sheet, but also the companies that are doing the lending, their balance sheets is going to balloon as well. They're going to feel like geniuses. It's going to increase their risk appetite, making them more likely to issue loans. So it's kind of just like a positive self-reinforcing prophecy. And they're also within the real world asset narrative, which I think is going to be the biggest narrative in terms of money. Maybe not like the sexiest narrative, but yeah. So I've been allocating capital across some private credit protocols and enter into some yield farming strategies so I can accumulate them passively, but still sitting on about 30 to 35% cash.
Based.
Yep. So other than that, guys, we're just going to keep our eye on it, take it one day at a time. Monitor the Fed because that's the most important thing. Have your take profit strategy set in place so that you're not you know, relying on like your euphoria. And yeah, I think some good money can be made this year.
Yeah, you guys know what we say every time. Don't buy the dime, buy the dollar. And that's our motto here.
That's the motto that we say every time, but this is our first time saying it.
And we say it every time, this time alone.
All right, you guys, thank you for tuning in. Subscribe, and we'll catch y'all in the next video. Peace out.
Peace out, fuckers.